Hello and welcome to DD India. Bharat continues to stand tall as one of the world's fastest growing major economies, consistently demonstrating resilience, ambition and remarkable progress across sectors. Even amid global uncertainties, from geopolitical shifts to market fluctuations, India's growth story remains strong, forward-looking and full of opportunity. Today, we are joined by the Chief Economic Advisor to the Government of India, Anantha Nageswaran, to help us decode the current economic landscape, the trajectory of the Indian rupee, and the reforms and strategies that are shaping India's journey toward becoming a global economic powerhouse. Sir, a very warm welcome to DD India. We are honored to have you on this special broadcast. Sir, when we talk about the world's fastest growing major economy, India, we also talk about the remarkable progress the country is making across sectors. In that context, how do you assess the current movement of the Indian rupee that we are witnessing right now?
So thank you for having me on the show. And the first thing we need to understand, as you have been correctly pointing out in your opening remarks, that our economic fundamentals are sound. And the last 11 years of economic reforms and structural reforms, infrastructure improvement, digital public infrastructure, all of these things have combined to lift the potential or the trend growth rate of the Indian economy. And right now, if you take a dipstick check or the macro health dashboard, we are actually doing very well. And I'm sure at some point the investors will understand this. However, sometimes the exchange rate market for short duration can take a detour of its own, partly because in the near term, capital flows may not be occurring at the rate at which our imports need to be financed. So typically imports are financed through obviously selling goods to others, exports, goods and services, and remittances coming from overseas by Indians, and also capital flows, whether it is equity or debt or foreign direct investment or financial market investments, etc. And these decisions are influenced by a lot of factors in their home countries or due to policies being pursued in those countries, sometimes restricting movement of capital or incentivizing the capital to stay at home over there, etc. And those policies can influence the capital flows from those countries to countries like India. And that may not have anything to do with our fundamentals. And that's very important to understand at this stage. The depreciating rupee does not signal that something is wrong with the Indian economy. On the contrary, the depreciating rupee does not reflect the Indian economic fundamentals. It is becoming cheaper, it is becoming valuable, and I'm sure at some stage, as has happened in the past, they will appreciate this, and the cheaper rupee itself will become a magnet for foreign investment inflows into India. Back to you.